incredibly successful team lead and realtor Rich Davey from Cincinnati. So welcome, Rich.
Wes, thanks for having me.
It's our pleasure. So kind of wanted to lay out the agenda here. So I will go ahead and do that. So what we're going to start off doing is talking to Rich. We're going to talk to Rich about what are some of the things that make his team, the Taylor-Davey team in Cincinnati, so successful, and what are some of the things that have helped Rich put that team together with the right pieces, and how Rich succeeds in winning offers for his clients and winning listings. I think there's some really insightful things that Rich will have to share there. Then we're going to talk about cashed keys and how Rich utilizes cashed keys, among other things, to make his clients successful in their bids and in selling their homes. We're then going to transition and talk about a new part of the Cash to Keys home buying and selling platform. It's called CashBridge, that does not require your client getting a mortgage. So if you have clients that want to use cash to purchase a home, but are eventually going to have money from the departing residents to purchase with their own cash, then CashBridge is going to be the platform for them. Then, for realtors that on the call that still want to hang out, that are newer to Cash to Keys, to Cash Offer, to Buy Now, Sell Later, and CashBridge, myself and Colleen Craig from the Cash Keys team are going to go through a Cash Keys Realtor certification. And at the end of that certification, you will be a Cash Keys certified realtor, ready to give these gifts to your clients. And then all throughout, we want to hear from you. So we'll start there now. In the chat, if you could introduce yourself, where you're from, where you're practicing real estate, and maybe what brought you to the call today, that'll help us. And there's also the Q&A. So if you can post some questions in there, we'll take a couple of breaks as we go through. If you have some questions for Rich, or if you have some questions for myself, Cash Keys, post those in there. So to introduce you, Rich, I mentioned that you run partnership with Keith, the Taylor-Davey group at Comey and Shepherd Realtors, and you've been incredibly successful since the Taylor-Davey group was formed in late 2020. You've closed 275 transactions with your clients. That's a really big number. And you have the awards in the Ohio President's Club and Circle of Excellence to go with that. When we were talking, you also mentioned that you participate with Homes for Heroes program, and the Taylor-Davey group is the leading participant in Homes for Heroes. What kind of attracted you to Homes to Heroes, Rich?
Yeah, so I would tell you, when we first, before the Homes to Heroes program kind of became a thing here at Comey and Shepherd, we were participating with one of our local title companies in the Yellow Ribbon Support Center. The father of a military soldier who had died in the Middle East started the group, and then they were friends with the title company, and they did this thing called Stockings for Soldiers. And so around Christmas time, get donations, collect them, stuff stockings, take them to the Yellow Ribbon Center, and then they would ship them out to soldiers that were overseas that just didn't have access to the kinds of very small luxuries that we have here in our everyday lives. And so, again, it was just sort of a way to say thank you for what they do. And, because for me personally, I'm just not, I'll be the first to admit, I would never be wired correctly to serve in the military. And I think that kind of makes me a little even more thankful that there are people like that who take that responsibility on. So we got involved with the Stockings for Soldiers program. And then they started the Homes for Heroes program here at Comey. I believe it would have been maybe 2021, somewhere around there. And it just sort of dovetailed really well with what we were already doing with stockings for soldiers. And it's been a really good talking point when we walk into a listing appointment, or we're doing a buyer's counseling session, when we're asking some of those questions to build relationships and we learn about that. It has been sort of one of those things that we can always leverage to kind of put us over the top to say, look, just this is just a way to say thank you for what you do. It's the least we can do is to provide a rebate back to you when we have a transaction together.
Yeah, that's beautiful that you do that and the success that you've had with that. So thanks for sharing.
Yep.
Rich, we have talked before, and your market in Cincinnati's been very active. Inventory's been tight. Is it still that way? Things slowing down seasonally for the summer?
Yeah, I would say right now, of course, everybody's getting ready to go back to school. So you always see, I think you typically see a little dip in the activity right now, at least. I know we are right now as well. 2024 has been sort of a year of a lot of uncertainty in the market. And I think that has just continued from 21, 22, 23, where I think a lot of buyers have voluntarily put themselves on the sideline because they're looking at it in a very, very simplistic way, right? Hey, rates used to be 3%. Now they're 7%. I don't want to buy a house when it's 7%. And if you kind of, as an agent, it's our responsibility, to kind of explain to them, yeah, I know that doesn't sound great, but there's actually some advantages to that as well. Do you remember the days when we would write an offer and there would be 25 other ones that you're competing with that, at 2.9% interest rates, they didn't hesitate to offer 60, 70, $80,000 over list price, because at 2.9%, the money was virtually free to them, and their monthly payment that they were comfortable with didn't change. So, we still continue to have that conversation with buyers, especially that that I know the interest rate seems unattractive to you, but we can actually maybe make that work for us as well.
Yeah, because the home price appreciation, while it may have moderated, it hasn't stopped. Right. So
right. And you don't have to go 80,000 over list price anymore. I mean, yes, in competitive situations, you're still going over list, but it's not to the same extent as it was in 2020 and maybe early 21.
Yeah. Rich, you formed a Taylor-Davey group in 2020.
Mm-hmm.
What is it that kind of pushed you over the edge in wanting to form a team? And what are some of the key pieces to having success in leading a real estate team for you?
Yeah, so my business partner Keith Taylor, I met him back in 2018. We were part of a different team, and at that time, we both kind of we certainly got along really well, and we kind of thought to ourselves, I think we could do this a little differently, hopefully better, or at least certainly not worse. We think we could do this a little differently and be successful at it. And so that's when I made the move from my prior brokerage to where I am now. And then shortly, after I kind of got acclimated to working here and learning the different systems that are involved here, we formed the team. I would tell you the first thing you got to do is you got to just inherently, you have to have trust in your business partner. And fortunately for Keith and I, we're not just business partners. We're very good friends away from work as well, and always have been. So that's the first thing. As far as building the team, there are different strategies. There are agents out there who are building teams, and if you've got a license and a pulse, hey, we'll take you, we'll train you up, and you may work out, you may not, and if you don't, then we're going to send you on your way, because we've got lots of other people getting licenses still too, and we'll just there's just constant rotation. They're very much a team of law of large numbers. You bring enough people in, you're going to find some good ones. Keith and I, we're probably more the opposite end of that. We try to be somewhat selective about who we want, because the truth of the matter is, Keith and I aren't really building a team for us to live off of. Keith and I still very, very much are involved in day-to-day sales,
Mhm.
listing presentations. For us, we actually don't want to rely on agents from the team to be a significant source of our income. So we bring in agents that we believe in, who probably have some experience, um, but who we think we can help build their book of business to a point where they become more successful than they were. And we provide them those resources, and then we're just kind of along for the ride. It becomes very much a all for one and one for all with us, because the truth of the matter is, I don't want constant turnover. I want to get good people in. I want to make it worth their while to be part of the team, and and I want them to stay, because I don't want to have to constantly be every 2 years be training new people. I personally, I don't have the time or energy for that anymore. And so we build our team. We built our team a little different. We're only 4 people and an unlicensed assistant, and it's working for us.
It sounds like you like the long-term coaching and mentoring aspects of that.
Yeah, I do. And Keith as well. We love having conversations with our agents. We do it. We have a weekly roundtable via Zoom, because our assistant actually now lives in Atlanta. But we have a weekly roundtable every week, and it's an opportunity to bring up questions, and our two buyers agents often do. They have questions, or they've got ideas, and we'll try to flesh out those ideas and see if we think those could be successful and implemented. But yeah, it's very, like I said, it's very much a team. It's not a trickle down thing where Keith and I are telling our agents, do this, do that, do it this way. We just don't want to do that.
Yeah. Um, Speaking of coaching, how are you coaching, and how's your team planning for the upcoming, when I say upcoming, I mean upcoming in a couple weeks, changes as a result of the NAR settlement? How do you view that?
Yeah, so it's one of those things. I think there's still a lot of question marks surrounding it. I know here in Cincinnati, I think we're implementing um, the pieces of that settlement here at the beginning of August. I think there's a lot of apprehension, not so much because it's not feasible, but just because, at least here in Cincinnati, we're not 100%. We don't have the mechanism in place that we know this is how it's going to happen. This is going to be how it works. We don't have that mechanism necessarily fully in place right now. So there's questions around that. And I think that's what's causing some of the nervousness with agents. The sky is not falling. I don't believe that. Is this going to make it harder? Maybe at first, only because we have to learn a new process. And so we're just trying to really focus on what is this process going to look like, and start implementing that into our day-to-day conversations. I'm looking at you and I'm thinking to myself, I remember when everybody was losing their mind over the Alta, right? Lenders were like, oh my gosh, I can't believe they're putting all this on us. And now I don't think you guys think twice about it. And I don't think agents do either. And I feel, or at least I hope, that this will be something very similar to that.
So you see some parallels of like a change in documentation, which is, the Alto fairly radical from the change there, and the CD to you have to have a buyer's agreement now every time, and you have to say, okay, this is, we'll talk about commission on this, but it's where it's gonna come from, but it's still gonna be coming.
Yeah, yeah, absolutely. It just again, I think it changes the conversation from our perspective. But in a lot of ways, it's an opportunity to educate a buyer about what my role is and what this process is going to look like. And and if we're educating the public on the process and we show that we have value because we understand it well, and we're always going to make things clear and as easy as possible for them, then I think that's a win.
Yeah. Um, Rich, I was talking to Heather on the Cash Keys team, who you've worked with a bit for the last couple of years, and she said a couple things, but one of them was with Rich, he gets his offers like they win on the first time. That she thought every time that the two of you worked together. And I know that was probably some of those from the Cash Keys perspective, but in general, what are some of the things that you do when you talk about and you consult with your clients who are buying, maybe selling and buying, but definitely buying?
Yeah.
When they're making an offer and they say, Rich, like, we think this is the house for us. Like, do you think we can win this?
Yeah. So, when you think, I'm always big on trying to get buyers to look at their offer from a seller's perspective. And I think, there are four major things that a seller is concerned about: price, inspections, financing, and appraisals. And probably in that order. Probably in that order. So, nothing is going to trump price. At the end of the day, there's that mindset of, well, but I'm offering cash. Well, nobody's going to take significantly less just because you're cash. They're going to risk having somebody just go get regular typical financing. And, if it means an extra 15, 20, $30,000, that's worth it to them. So price still trumps all. And then the next question becomes, what does a seller, their next concern is, what's going to be asked of me? And that's where inspections come in. And there's multiple ways, as we've all learned over the last 4 years, there are multiple ways of handling the inspection process and what a buyer is willing or not willing to sacrifice in the way of inspections or defect notice requests. Those have become more prevalent. Whereas back before that, it was just you just did an inspection. You reserved the right to ask for repairs based on the results of the inspection. That was just common. And now there's much more nuance to how inspections are being handled. And that doesn't change with cash to keys. That doesn't change with cash to keys. But if financing is the third most important thing here, now we get into the cash to keys thing. And it's weird. Prior to 2020, I didn't see a lot of cash deals, at least not in my market, for the 20 years I was in the business. And then all of a sudden, it's like everybody just broke their piggy banks and started paying cash for homes. And I couldn't help but wonder, like, where is this coming from? So buyers very quickly who were getting financing were losing for no other reason than somebody could say, I got 7 cash offers, Rich. I'm sorry. There's no way we're not going to take one of those. Okay, I get that. So this at least put those buyers into more equal footing with those cash buyers. And, that's important. I mean, sellers want to know that their deal isn't going to fall apart because somebody lost their job, or medical expenses came up and now they've eaten up their savings and now they don't have the money for a down payment and closing costs. That is still important to sellers, and this puts those buyers on equal footing.
Okay. So Rich, from your perspective of cash to keys, there's the cash offer platform for people that don't need to sell a house. And there's a buy now, sell later for folks that would need to sell their departing residence in order to qualify for a mortgage to purchase the new one. And I know you've done several of both. What are cash offer and buy now, sell later to you from the realtor's perspective? What are they doing?
I'm sorry, what was the question?
What are cash offer and buy now, sell later doing from your perspective? Are they complicated? What are they achieving when you introduce?
Not complicated, certainly not complicated. Again, from the cash to keys is still, that's pretty straightforward, right? Just, you tell the buyer, we're going to treat this like a finance deal. We're going to still think about appraisal. We're going to still think about inspections that way. We're still going to think about all those closing dates. We're going to think about everything. but we get to say that it's a cash deal, which in turn elevates their offer on the priority list that a seller is that they're looking at. They're going to more heavily consider that offer. And as a buyer's agent, that's a win. Anytime you can push your buyer up the ladder, that's a win. Hopefully you win, but there's never a guarantee that you're going to, because you might be up against other cash offers, including other cash offers that don't have an appraisal requirement, which is a requirement with cash to keys, because we know that there is an underlying mortgage being worked on in the process. So, from a buyer's perspective, it's not terribly difficult. I'd say the most complicated thing on cash to keys is you got to explain it to the listing agent. They have to understand how this works. Well, Rich, I see cash, but there's an appraisal. Why? That makes sense. That's a good question. And so you got to go through that process. The buy now, sell later is I think is what has more potential to be useful to people's business, because especially, ever since I started, you'd go into a listing presentation and a seller would say, "Oh, but Rich, what happens if I sell my house and then I can't find something I like?" And for 19 years, I could say, "Great question, not going to happen. There's so many
Yeah.
houses for sale. Trust me. You got to trust me here. We're going to find you a house. It's going to be okay."
Yeah, it's a
And then
well-founded anxiety now, right? Because
and now 2020
yeah,
hit, and all of a sudden the rules changed, and you had to go into conversations and say, "Look, um, you got to sell to buy, and there's not a lot out there right now. Inventory has dropped. Yeah, you realistically need to have a backup plan for temporary housing, because your house, it may not sell quickly. It will sell quickly, but it's going to sell for some amount that a year ago you probably never thought was possible. So you're taking advantage of that. Then you're going to get a loan at 2.9% or whatever the rates are at that time. It's all going to be a win-win, but you're going to have that potential gap where you need temporary housing. So that's where that question of what happens if I sell my house too quickly became much more a reality. And buy now, sell later kind of provides the solution for the seller who just can't wrap their head around selling first, or is just completely unwilling or possibly unable to do temporary housing before they find their next house. Especially
yeah,
when you hear horror stories about how long some buyers have been out there looking for homes. I mean, that's a legit concern for sellers. Buy now, sell later kind of solves that entire problem.
yeah. That happened to me, Rich, in 2021, right before we created Cash to Keys. Sold my property, and when it, got a house to rent, got a 4-month lease, thought that was great. 4 months ended, couldn't extend, ended up in the extended stay over there across the street
Yeah,
with the kids and the dog. I mean,
yeah,
it was a nightmare. And when when you talk about the costs of moving again, of pods and of storage, that part of it was well over
right.
$10,000. That
Sure.
actually,
Sure. And that's where I'll piggyback to, coming back to buy now, sell later. We know that there is a cash fee that's being charged to the client when AnnieMac buys the house on their behalf, rents it back to the buyer, so that while they're in the process of selling their home, and people want to balk at the idea of, "Oh, I got to pay for AnnieMac to do that." Well, sure, they're providing you a service. I mean, the way I kind of couch it with sellers is, would you pay $10 for someone to go buy the house on your behalf so that you don't lose it? Sure. $100, of course. $1,000, of course. $5,000. Like, where is your pain threshold for how much you're willing to pay on that cash fee to not lose out on the house that you really, really want, and have the ability to not have to do that double move? And if you did do the double move, like you mentioned, there's expenses associated with that. So now we're just reallocating where those expenses are going. They're not going to temporary housing and storage units, and they're just being paid to AnnieMac as the cash fee, and you're getting to flip the script on the whole, I got to sell to buy.
Yeah. Well, Rich, what if they were to put in an offer with a home sale contingency? How how does that play in your market?
Not well. I imagine not well in most. There are still no shortage of buyers for the inventory that we have. And so, I would argue that any offer that's being accepted with a contingency, there's a reason for it. Most houses, if they're properly staged, properly priced, whatever, the contingency is practically the death knell of the offer. Probably not going to get. That's not to say that there aren't some. I know that there are, but it's still quite rare in our market anyway.
Yeah. So it's either sell first, look at the temporary housing option,
Right.
Is sort of the way to go, or
And
look at something like buy now, sell later.
yeah, and the thing is, when you have the conversation with the seller, I can't guarantee how long it's going to take after you sell it. I can't tell you how long it's going to take you to find the right house and then win in a potentially multiple offer situation. Like you learned, there's no guarantee. But when you get to flip the script, like I said, you're in control of the timeline, right? You're not leaving your house until you found the right one and you've told AnnieMac, please buy me that house so that I can get my house on the market straight away, and then we'll make the exchange at the end where you sell me back the house. They are in full control of the timeline now. And I think, one of the things that people sometimes lose sight of is money is great, but sometimes the timing is every bit as important.
Yeah, absolutely. Especially if that house comes on the market, right?
Yeah.
So, for your clients, what if your dream house came on the market tomorrow and you have a house to sell?
Yeah.
Probably not going to be you that wins that offer. But if you had a pre-approval for something like buy now, sell later, in that situation, then that impediment's gone. And that can, to your point, the timing element can be removed. Rich, how for your clients that have done cash offer and buy now, sell later, how has it gone for them personally?
Yeah, it's been really successful. I think there are a couple talking points that you need to have with them. I think the first one is, hey, look, to even qualify for cash to keys or buy now, sell later, our team, the AnnieMac team here is going to ask you for what seems like a lot of documentation to get the qualification done. But you're going to be providing that information anyway, right? If you did standard financing, they're going to ask you for all those W-2s and bank statements. And like, you're going to have to do that anyway. So let's just get that out of the way and put yourself in a better position to be able to say, we're a cash to keys offer. So I think that's the first thing, is coaching the client to say, look, it feels like there's a lot of legwork at the front end. And yeah, maybe there is, but it's all legwork that has to get done at some point throughout the process, regardless. So, the buyers from that point, once they get their heads around that, I think, they love the idea of, if something were to happen, AnnieMac can swoop in, throw their money on the table and say, nope, we're still buying this house for Mr. and Mrs. Buyer here. They're still going to get the house and we'll figure it out on the back end. Right. But as far as receptiveness from buyers and those sellers who are scared of selling too quickly, the reception is quite good, because they understand how much it benefits them.
Yeah, right. And your clients, I think for buy now, sell later, cash keys end up purchasing the property for them, as a sort of designed to do. And there's also that option that you can write a contract for a 45, 50-day contract with cash keys as the buyer. And then if they do want to list their house right away, and accept the offers that they get initially, they can still purchase directly.
Yeah.
Right. So that can be assigned to them, and there's that optionality there.
Yep.
Awesome. Let's see if we have any questions in the Q&A, and maybe a good time to introduce Colleen Craig. Colleen, I think you messaged me that might not have video capabilities. There she is. Hello,
Made a
hello,
liar
Colleen.
out of you.
Hey, Rich, how are you?
Hey, Colleen. Good. How are you?
Good. So the
Um,
one question we do have, I think the first one in the chat is just in response to something Rich was saying. And Oliver said the buyer excitement of a house, those are non-tangible items. So those are, that was just a comment to something that you were saying earlier. We have a question. How does the buyer's agent get compensated when the changes come about in August if Cash to Keys has to purchase the house? And Karen is referring to the NAR settlement.
yeah, that's a great question. Rich, you said, there's maybe some things still to be settled. Let me pose this. So, you have a client that says, "Hey, I think I want to make an offer on the house that you showed me this morning," and your team works to prepare the offer. And if you find out that there's no buyer side compensation being offered by the seller, like what are some ways that can be handled?
Well, with the settlement, right, that would all be actually handled ahead of time with the as I understand it, with the buyer's agency agreement, right? We're going to have those conversations about compensation and how it's going to work, and that's where some of the questions still come about that I don't think we know the answers to. What happens if a buyer directs me to never show them a house where the seller's not offering compensation? Is that considered steering? I don't know. Don't know the answer to that. But ideally, that situation would have already been handled. However, that agent wants to handle their business, that would already be discussed ahead of time in their buyer consultation and the signing of the buyer broker agreement. That's how I have it understood.
Okay. And so there, if your buyers agree to pay X, is it that they might pay that money from some reserves that they have in a bank account, or might the offer be made with a request for a seller assist?
You can do seller concessions. As I understand it, it's been approved that co-op commission can be part of a seller concession separate from a seller concession for closing costs and prepaids, and that the concession for co-op commission will not apply towards their maximum percentage as to what they can receive in the way of closing costs. So I think what we're going to see is every offer that's written is probably going to have a line in there that says seller to provide a seller concession for co-op commission of whatever that number or percentage is. I believe, don't quote me on this, but I believe, at least here, we're planning on making contract changes to specifically add that wording into the contract as one of the clauses or paragraphs, because we know it's going to happen. We know it's going to be so common. So that's certainly going to be something that I think we see in the future. And
that's great stuff there. And Karen, I think it's a really good question. So with, let's say there was the buy now, sell later with Cash to Keys, where your client would have to sell their property first, probably win an offer, but because they're using buy now, sell later, AnnieMac Private Equity Cash to Keys is going to go down as the buyer on the contract to the seller for your clients. And then if they sell their house and you can line up those closings, it can be assigned and they can buy direct. Or, as happens a little more than half the time, Cash Keys is going to proceed to closing, take title to the property. With buy now, sell later, something that we expect a lot of realtors to take advantage of is if the seller is not paying buyer's agent compensation, and let's say that your buyers agreed to pay 3%. You might, in that case, if they don't have that money in the bank or don't want to access that money in the bank, have to ask for a seller's assist. But with buy now, sell later, what would happen is Cash Keys would take title to that property. And then when we resell the property to your client purchases the property, they're going to then have the equity from their departing residence. As a matter of fact, it's a requirement for buy now, sell later that they have equity in their departing residence. And then they can pay your 3% real estate commission on that closing with the proceeds of their departing residence. So you wouldn't have to ask for a seller assist if that's something that you didn't want to do. Say there's 10 offers on the property, they're not paying seller's agent commission. Maybe the other 9 offers have a request for seller assist, but you can say, hey, look at our offer. There's no mortgage contingency. There's no home sale contingency. It's a cash buyer. And there's no request for seller assist because Cash Keys can purchase the property in the interim, resell it after they've sold their departing residence, and they now have access to that equity to purchase the property, and your commission can be paid out of that, as opposed to a request for seller assist, another way to help you differentiate their offer and win it. So yeah, fantastic question, I think. Colleen, anything else in the chat here? Yeah, thank you. So we do have an anonymous question here. I wasn't on the Q&A last week. Curious how you present a Cash Keys offer, knowing it's still subject to an appraisal, so it's not a true cash offer and will take 30-ish days to close versus a true cash offer. I think that's a great question. So I have some thoughts on that. Rich, do you have some thoughts on that too?
Yeah, so whoever that was, they're right. It is not a pure cash offer in the sense that most of us expect. And so, like I said, buyers buy into Cash to Keys very, very quickly. Listing agents, there is a conversation to be had between the buyer's agent presenting the offer and the listing agent to make sure that they understand how this is going to look and why there is that appraisal in there, so that you know, hey, there is an underlying loan that is being currently worked on. But again, from the seller's perspective, and this is the point I always try to drive home, is that AnnieMac is, I kind of use the term angel investor, right? They are just sitting in the background, waiting for something to go wrong with the loan that's being worked on, just waiting for something to go wrong. And if it does, they're there to solve the problem. But you do still need to explain to the listing agent, hey, there is an appraisal. And just because it's a cash deal doesn't mean a buyer can't have an appraisal. Buyer can have a cash deal and still do an appraisal. I understand that it's uncommon, but that is certainly an option to a buyer, is to ask for an appraisal. But like I said, price, inspections, financing, appraisal, I think those are the 4 major things, and closing date, I guess, too. But those are the big ones. And I think the fact that there is an appraisal is one of the lesser concerns a seller has if all the other boxes are getting checked. You start throwing in appraisal gap coverage, and that becomes even less of an issue or a concern for the seller. I think the biggest thing is education of the listing agent on what Cash to Keys really does. I'm a firm believer that sometimes hearing it from the team that we have in place here, who are fantastic, we'll call Tony up and say, hey, could you please make a phone call to this listing agent and just make sure she doesn't have any questions that she didn't ask me or that I didn't answer for her, and make sure she understands it. And having a loan officer that is always ready to jump to my cause and make that call as well, is just all that much more beneficial. But most agents, I think, once they kind of wrap their heads around how this actually works, they like it too. I mean, again, it's a guarantee that the house is still going to get sold on their timeline. I think the biggest question they have is, what happens if AnnieMac ends up buying the house on behalf of the buyer? Once we close on that, what other responsibilities or obligations do we have to the process, right? And the answer is what they want to hear. None. You're done. You sold the house. Yes, you were going to sell it to Jim and Jane. Instead, you sold it to AnnieMac Private Equity, but you're done. You've got your money. You've sold your house. You've moved on. Don't worry about us. We'll take care of it. We'll take care of it on our back end.
Yeah, yeah, some great points, and I've seen that appraisals along with traditional cash offers, and then we also have with cash offer and buy now sell later. And Rich, I think you've had one or two where there's an appraisal waiver from Fannie Mae or Freddie Mac, so not always an appraisal required. And I do love pairing appraisal gap coverage. You can qualify for a 97% purchase with cash to keys. Does allow you to use some of your funds as a pledge for appraisal gap coverage in the often unlikely event that comes to play. And I know you use that too, Rich.
Yeah, and regarding appraisal gap coverage, I think it's one of those conversations that maybe we don't have enough with buyers, at least in the sense of getting them to understand, offering up X number of dollars in appraisal gap coverage. Yes, it might mean that you're not going to get 20% down now. You might only be able to do 15, but it's only if it doesn't appraise. I think buyers immediately jump to the conclusion of, oh, well, now I'm going to pay PMI because I have to pay this appraisal gap coverage. Well, no, not if it appraises. It's just a backup in case it doesn't appraise. And the chances are, maybe even if it doesn't appraise, like I just did one, Chase and Amber Martini. We made an offer $55,000 over the list price with $50,000 in appraisal gap coverage, but it appraised. And even if it hadn't appraised, it might have only underappraised by 10,000, let's say. So you're not necessarily eating up all that appraisal gap coverage that a buyer has the potential to offer. The probability, I think, is small, not zero, but it's small. You'll probably never have to use it, but it certainly does make a seller feel a lot better to know that even though it's a cash offer with an appraisal, you can offer coverage for that gap if there happens to be one.
Yeah, right. And Rich, I think, I know all the cash keys transactions that you've done have been with people that needed a mortgage when they ultimately purchased the property. I mentioned to you yesterday that Cash Keys now has very recently, as part of our platform, something called CashBridge. And so this is going to be for clients that maybe they're downsizing. They'd love to buy in cash, and they could buy in cash if they could just access the equity in their departing residence. And so CashBridge is going to be like buy now, sell later, where AnnieMac Private Equity Cash Keys will get under contract for them and proceed to closing. And, there's no mortgage needed at the end here. So Cash Keys can purchase the property again, collect a portion of the fee. We're going to go over that for folks that are newer to it in the certification. And they can then take title to the property using the cash from their departing residence. We look forward to talking to you more about that and maybe doing some of those transactions.
Sure. Yeah, absolutely. It seems like it seems like a useful product, especially for, as we get into, the baby boomers selling their homes and people that have built up so much equity over the last 4 years who are now making a move for whatever reason. especially if they're saying like they're downsizing or they're moving to a market where the cost of housing isn't quite what it is where they've started at. They might be able to have the proceeds cover their entire sale, but it still leverages the best parts of buy now, sell later in allowing you to sort of, again, flip that script to the way a seller wants it to be, and give them that power to be able to buy first, which is important to them, especially if they know they've got enough equity in the house. They don't want to have to go get a mortgage knowing full well that in 6 months they're just going to end up paying it off anyway. It just seems like hoops to jump through for them. So having something like CashBridge that says, look, at the end of the day, when this is all said and done, we're at the end game, is probably going to appeal to a lot of those types of sellers.
Yeah. Especially if they're downsizing, they're going to have a lot of junk that they have to get out of that property, right? Not junk, old treasures that they're going to have to get out. So not have to do that first. Awesome. For those realtors that want to hang on, Colleen and I are going to go through a little more of the details of cash offer and buy now, sell later transactions. And Rich, we want to thank you. You're a great partner, and I really appreciate you taking time out of your afternoon to share some of your expertise and your successes with your colleagues in the real estate industry.
Yeah, no, thanks to you guys. It's my pleasure to be here. This has been, like I said, this has been incredibly useful in the right situations for me. I try to push it as much as I can to buyers who I think might be able to meet the qualifications. I don't think there's any harm in qualifying for the Cash to Keys program or the buy now, sell later. At the end of the day, it's just a value decision on their part whether they want to do that, especially the buy now, sell later, because of the cash fee that's involved. It's a value proposition for them that they've got to make the decision. Is it worth it to me or not? And I think what I'm finding is that when we have those conversations, for a lot of folks, it is worth it to them.
Yeah. Well, thank you. All right. Appreciate you, Rich.
All right. Thanks, guys.
So one